Hello, traders. It's Friday, December 4th, and we're about 4 hours into trading. I thought I would do a video today and tell you a little bit about option lottery trades they're going to be setting up for us in the last hour of trading on Friday. We're looking for weekly options that are just about to expire. We want to have stocks that have very strong momentum, so I'm going to try and highlight some of the key features for this strategy. Now, before I get started, I have to tell you that this is a low risk because we're not paying a lot of money for these options, low probability because these options are set to expire in a few hours, high reward trading strategy because these options, if we do this right, can go for pennies, let's say a nickel to 20 cents, maybe even 30 cents in the last half hour trading. So yes, the percentage returns on these are very, very high, but it's that probability of success that's so low. That's the part of the equation that we must work on. Patience and discipline are the key to this strategy. 99% of the people watching this video are going to try or have already tried and are going to lose money with this strategy because they are not patient, they are not disciplined, and they do not have a trading system. So this is not something that's easy. This is not something that I allocate a lot of my money to, but it's a really fun way to end the week. And my hit ratio is probably about 70% on these. Last week I had a loser and I had a winner, so they kind of washed. But I didn't have a great market environment for it. So let's take a look at the strategy. Let's take a look at the market first. Everything starts and ends with the market. You can see here how we open the day right here. This is a 5-minute chart on the S&P 500, three nice long green candles, and then we get a little bit choppy in here. When I saw this pattern right here, I knew that we didn't have a whole lot of upside left in the day because that is not a lot of momentum where you get a green bar immediately reversed by a red bar, another green bar immediately reversed. We get a little bit of shorting in here because when traders see that type of formation, they assume that we're going to roll over. This was a new all-time high for the market. So they started to short in here and they got squeezed. And that led to this blow-off candle right here. And then we had a lower high double top. So right now, it looks like the highs for the day are in. And I believe, and we had this gradual drift lower. Look at how tiny, tiny, tiny these candles are. We probably moved not even an S&P point in an hour. And then we get a nice little short covering spike right here, and that's going to be reversed immediately. Here's what I think is going to happen today. If I take a look at the daily chart, we've got a lot of doji bodies. That means that the close of the day is very close to the open of the day. Very, very important when you're day trading to take a step back, take a look at the longer term picture, and try to put today's price action into context. So we're going to do that, and I'll go to the daily chart, and here you can see doji right there, doji right there, doji right there, there, pretty close to one right there. We did have a nice bar right in there. Today looks like it's going to be a nice bar, but this day is not done yet, especially off of a high right here. We can expect to see some profit taking off of an all-time high. There's nothing really to drive the market today. We had a jobs report that came out much weaker than expected today. That was due to the coronavirus. I'm not going to get into the fundamentals of the market right now. If you'd like more information on fundamental and technical analysis, please take a look at the description below this YouTube video. I have a link to my Twitter feed. You can click on that. You can follow me on Twitter. Every day I post my market comments before the open so that you know exactly what I think is going to be happening for the day and what my fundamental and technical analysis is. So please look for that and join me on Twitter. In any event, I believe that today we're going to gradually drift lower and we're going to come down perhaps even to the open today and test that once. So it's unusual to see a candle without a tail under the body. And today we opened right about on the low. So we'll see if I'm right. I've got a small short position on. If I'm right, I'm not going to make a lot of money. If the market breaks out to a new high, I'm not going to lose a lot of money. This is a very small bet. I'm keeping everything very small today. That's one of the hardest things that new traders have to realize is that there are times when you do not want to actively trade. There's just nothing happening. In the chat room, we've had some traders pick off some really nice scalps today on some very, very strong stocks. I haven't been participating to any great degree, and I thought I'd take the time to record this video. So let's get on with it. We know that the market wants to move higher. And with regard to any kind of lotto trade in the last hour of trading, we have to have a market tailwind. Super, super important because the stock itself is not going to have enough gas to get across the finish line, which is the strike price. It's not going to have enough gas to get across the finish line on its own. It's going to need help from the market. Now, the market right now is in an uptrend. Okay, that's great. You can see that on the chart here. There's your uptrend line, new all-time high. But we're at the high. We're not going to see any gigantic thrust into the close from this level right here. It's not going to happen. We've already seen high, lower high, double top. 1, 2, 3. Lots of selling pressure up here. I believe we are going to back off during the course of the day. And if we do, then we have the setup that we're going to be looking for. But it is critically important that we patiently wait for that market drop. Because when the market comes in and it eventually forms a support level, hopefully this is taking place in the last hour of trading, then we're going to have a couple of very important things that happen. Number one, that market drop is going to find support and we should see some buying into the close. Aha, market tailwind, buying into the close. The second thing that's going to happen is that as the market continues to drop, we're going to be able to very easily identify stocks with relative strength. Those are the stocks that we want to focus on. What does that mean, relative strength? That means that when the market is dropping, these stocks are treading water and in some cases even moving higher. And that tells us that buyers are anxious to gobble up shares of those stocks because they aren't able to drop. We know the buyers are there supporting it. Well, when the market finally does find support, and the market starts to rally a little bit, that's like throwing gasoline on the fire for these very, very strong stocks. That market momentum and the momentum in the underlying stock are what fuel it higher. So we're going to be looking for options that expire today. We're going to be looking for very, very strong stocks, and we're going to try and buy options in the last hour of trading. And we're going to wait till the very last possible second to try and scoop these for pennies. So let's take a look at a search that I ran, and then we'll take a look at some stocks and see what might set up well. So I'm using the custom search engine in Option Stalker. This search engine will find anything you want. We've got all sorts of variables, no coding required, binary, toggle on, toggle off, mark the boxes for the different time frames. It's super easy to use. So we have an option liquidity rating. I want to make sure that it's fairly high, so I'm using a value of 2 or higher. I also want to make sure that the stock has some heavy volume today. Now this gauges the stock's volume today versus its 20-day moving average volume. We want to make sure that there's lots of buying and lots of interest in these shares today. I also want to make sure that we have weekly options because I don't want to have to filter through stocks that don't have any options expiring today. Very important box for us to mark. Stock greater than the prior day high. Well, the market is up today. Why would I want to trade a stock that's not even above its prior day high? Of course I want that. So we've got those variables, and then I also, right now, will be looking for a stock that's got some momentum to the upside, so bullish ADX on a 15-minute basis. Now this could change in the next hour, and it's likely to change. I'll be watching this search in the last hour of trading, but let's see what it brings up right now so that I can show you the types of stocks that really work well for this setup. And I'm just going to go through the list and I'm going to click on them and I'll show you what I like and what I don't like. Here's one that I do like. This is Qualcomm. This is on the list. And let's just start with Qualcomm because you can see, look at that momentum. Really incredible. And here you've got the last two bars. This is a 5-minute chart of the SPY that I'm running in the background. I always keep this chart running in the background so that I never lose track of what the market is doing. Look at these last two bars here. Look what the market's been doing the last half an hour. Tick, 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 lower. Now this is not a big move, but it has been moving lower. And there we've got two bars that are also lower. What's this stock been doing? Last two bars are up. It has relative strength. And you can see on this bar, pops up. This stock wants to go higher. Let's take a look at the daily chart. And I always like to find stocks that I like on a daily basis, a swing basis, if you will, before I day trade them. So I want to make sure that the longer term chart is intact and that I like the stock longer term. It helps me when I'm day trading. Sometimes I get a market curveball thrown at me intraday and I get stuck in a stock. Doesn't happen often, but sometimes I do. If that's the case and I feel that the drop in the stock is market related, or maybe there is a news item that really wasn't that material, I'll hang on to it overnight and then I'll wait to sell it the next day. So in this case, we've got a breakout on a daily chart to a new all-time high. I like that. Long green candle closing on its high. Now, the one thing that I know from Qualcomm, because I've traded it a lot, it tends to be a pretty choppy stock. And you can see it's not a fast mover. It makes its move and then it kind of stalls out and it chops around. But today, it's got some really nice price action. There you can see the SPY continuing to drop. Let's go in and take a look at Qualcomm. And let's see what it's doing. You can see that it's dipping a little bit in here. And that's okay as long as it's able to kind of tread water with a market pullback. I'm okay with it. Now, as we get into the last hour of trading, I'm really going to want to see the stock be able to hold its own well versus the market. So I'm expecting the market to come in. I want to see the stock really maintain its price level because that tells me that it wants to go higher into the close and into the weekend. And on a stock like Qualcomm, what I would be looking for is we already know that the stock has already been up to $58. That's good. A $57 strike price, which is right about in here, would be in the money. We're currently about 55 cents out of the money on it. So if I take a look at the 57 call, yes, the stock should be able to get through that. It's been all the way up to $58 today. So let's bring up that option chain. And there's Qualcomm, and these are the weekly options that expire today. We'll go down to the 57 strike. And actually, they don't have a 57 strike. They've got a 57.50 strike. So let's see where that comes into play. 57.50, could it get there right in here? Yeah, sure. It's been to $58 today. So yes, it could get there. So how much are these calls? These calls right now are 18 cents bid, offered at 23 cents. And you can see also these lines in here. The red line is 1 standard deviation. The blue line is 2 standard deviations. So you can see how tightly wound this stock is typically. Now, most people will come and take a look at this and they will go, oh yeah, look at Qualcomm. This is a great one. I'm going to buy some. It's going to run like mad. And look, I could buy these calls for just this 157.50s for just 25 cents. No problem. I like it. I'm going to buy some because this stock could go to 158. Those will be worth 50 cents. Will double my money. That's the prevailing mentality. That's not our mentality. That's not what we do. We're disciplined. We're patient. If I don't get the market movement that I'm looking for, I'm not going to trade it. Period. I will pass on it and I won't do any lotto trades. And today, with this kind of horrible price action right here, there's a good chance we won't be doing any lotto trades. I do like this because I'm short right now, but If the market doesn't come all the way back and give us a really good entry point where I think that the market could rally 10 S&P points or better into the close, I'm not going to be playing. So, rule number 1, it's only 25 cents. I can afford to lose 25 cents. I don't do trades just to do trades, even if they're lotto trades. I do trades to make money. I do not like gambling. I do not like throwing money away. It takes me way too long and I have to work way too hard to make 25 cents. So I'm not just going to willy-nilly have fun in the last hour and burn money and throw it away. I encourage you not to do that. So oftentimes, you'll see people who they're gnawing at the bit and they cannot resist the temptation to buy these options because I know this stock is going to go higher. So, even in the last hour of trading, they'll buy these for 26 cents and they'll not pay attention to what the market's doing, and all of a sudden the market starts to drift lower and the stock starts to drift lower. And then the next thing you know it, these options, which are like putting a ice cube in a frying pan, that time decay is accelerated to the highest degree that you can possibly expect. Well, they're sitting on these options, and these options go from 25 cents down to 10 cents. And now they can't take it. They're like, oh, this is going to be a loser. I'm done. I'm done. Okay, that's it. Sell them. Just get rid of them. Try and get something for them. So they puke out the options at 10 cents, which is probably when I'm going to be looking to buy them. And now, when I buy them at 10 cents and they go up to 25 cents, I've just hit a 100% winner. And I'm telling you, these options go down in value like you've never seen before. So you better wait till the very last possible second. And a market decline like this will start to drain all of that call option premium. It's exactly what I want. So I'm looking to buy something like this. And even though I've highlighted Qualcomm, I have to mention this. I'm not telling you to go trade Qualcomm today. Everything could change in the next hour. All I can tell you is I have the searches to help me find the stocks, and I'm going to show you the patterns that I look for. This may not be a good one to trade. I don't know right now. There's still lots of time, 2 hours to go until the closing bell. So please don't go out and rush and buy Qualcomm. Please use this video as a learning experience. So in any event, Qualcomm, I would be waiting and waiting and waiting for those options to get dirt cheap, and I would be watching every tick of the stock on a 5-minute chart, just like I'm doing here, watching the market too. As the market comes in, I want to see this stock flatline right here. And then as soon as I get that market bounce and a 1OP indicator, my proprietary indicator for the market, as soon as that has a bullish cross to it, then I know that the market's ready to bounce. I'll be in there scooping those. And so here's what happens. If you've traded options long enough, you know that market makers always love to play games with the option premiums. If you're trading options, you want to buy them out of the money, but at a strike where there's a good probability that they're going to be able to poke through that strike price. Once they go through the strike price, they are going to trade at parity. That means that these options have intrinsic value and they will trade at a delta of 1. So if this stock goes up to $58, those 157.50 calls, they are going to be worth 50 cents. They have to be, or there's an arbitrage opportunity. And so if the stock were 158 bid, I know I can get 50 cents for that. And if I put an order in, 99.9 times out of 100, I'm going to get filled on that because the algorithms are going to take me out of that trade. So everything is on auto quote. There aren't any real market makers physically anymore anyway, but that's how the algorithms work. So look at the bid of the stock and you'll be able to figure out what parity is. You can always get out of the option at that price. I don't wait until the very end. I don't wait until the closing bell. Here's what I do. let's say that I buy these options at 10 cents. I'm going to immediately put an offer in for 20 cents for half of the position. I'm going to try to sell half of the position for a double. If I'm able to sell half of the position for a double, that means I have a free trade. That's another way that I can increase my probability of success because now I got a free trade. I can't lose money on the trade. And in the last 5 minutes of trading, when the stock is going crazy, it's much easier to manage that position when I have a smaller position. And sometimes the biggest move actually does come right into the closing bell. So those options can go from 20 cents to maybe 40 or 50 cents if you really hang in there. So let's take a look and see what kind of stocks there might be. That is the premise behind the trade. We're trying to buy just out of the money options where we feel the stock has a very high probability of crossing that strike price, crossing that finish line, going in the money, because once the options go in the money, they're going to trade at a delta of 1. They will be trading in tandem with the underlying stock. I want to pay very, very little for these. Today, I need to make sure that I've got that market drop and that market support because that market move and that bounce higher is going to fuel the stock. And that's what's going to push it across the finish line. So very, very important and very important that I have relative strength. In Option Stalker, I can put up my relative strength indicator, and as long as the orange line is above 0, like it is right here, I know that it is strong relative to the S&P 500. So let's take a look at some stocks, see what we've got. This is from the list that I ran earlier, and we're going to just take a look. Here's a good stock. It's a cheapie. If you don't want to trade options, you can trade the stock. You can trade the stock anytime. This is a nice stock. This is one that we would be day trading. BB is the symbol. Let's take a look at that daily chart. Big gap up here. Big candle, big range. Stock finds support right on the open from there. Tails under body. It wants to go. Yes, this is a nice looking stock. Grind, grind, grind. Market down, down, down. Stock up, up, up. It wants to go. This is exactly the kind of stock we want to find. When the market comes down and forms that low and the market starts to go higher, this thing is going to have a long green bar. And then you'll be able to take profits on the trade. This is what we do all day long. This is how we trade in the chat room. And it's not just me, lots of members. They're going to be going through searches like I'm showing you right now, and they're going to be watching for exactly the same thing. Market down, stock up. Buyers are lined up. FCX, market up, slow grinder, nice. FSLY, been a lot of money made on that one today. I do like this daily chart, by the way. I like that breakout right there above the 50-day and the 100-day moving average. Not crazy above this long tail above body here, but the stock got way overheated. I do like this as long as it can hold that 100-day moving average. I like FSLY. I believe that right in here, this gap can be filled. So if you're looking for a nice swing trade, I think it fits the bill. You can sell a bullish put spread below that $70 strike price all day long. I don't think you're going to get much at the 200-day moving average down there at the $62 price level. It's too far out of the money, but you can take a look at it. I do like that setup though. So FSLY, it got ahead of itself right here. This downward sloping trend line would have to be breached, and in the next hour, I'd need to see market down, 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 stock going tick, tick, tick higher, break that downward sloping trend line, then yes, there's a possibility for it. HAL, beautiful. Energy stocks today, nice relative strength, close to the high of the day, market down, stock up, you bet. Nice, tight, predictable trading pattern, very orderly price movement. That's what we want. We want to be able to take a look at a chart and be able to predict where we think that stock will go. Intel. You know I like Intel because I've been telling you to sell out of the money bullish put spreads on it. Intel hits a high, double top, pulling back. It's been strong today. Take a look at that daily chart. I liked it right there on that 100-day. And you can see how the stock is continuing to move up. And I'd mentioned back in here, it's likely to fill this gap. It's exactly what it's doing. But not the relative strength that I'd be looking for. MU, Micron, nice, nice. Still very close to the high. Let me bring out another point here. When I'm looking for these plays, I don't want the stock to drift too much off of its high, because if it pulls way back like FSLY did, it might not be able to recover, and it's a sign that the buyers are not quite that anxious to buy the stock at those price levels. But as long as it can stay within striking distance of that high, it's got decent relative strength. Qualcomm we already took a look at. SE, nice big move higher, compressing right now, able to hold all of these gains while the market pulls back. Yes, this stock wants to go. Let's take a look at the daily chart. Oh yeah, beautiful little breakout here on a daily basis. SE is the symbol. You bet that would work. I hope it's got liquid options. It should have liquid options because it came up in the search. Let's take a look at that one just to see what we've got cooking there. Stock at 201.43. It's got weekly options. So we're going to take a look at the 202s. Maybe the stock can get there, and it may not have 202 calls. It does not, but it's got 202.50s. That's getting a little bit too far out of the money, but the stock, let's take a look at what it's done already today, and then we'll be able to judge if it's got that type of move. It's gone from 187.50 all the way up to 201. That's a $12.50 move. Could it move another dollar into the close? Oh yeah, you bet. Sure could. So these options right here, the 202.50s, these are going to be the ice cube in the frying pan. Every single minute, these babies are going to lose time value. Now, if I can pick these up and the stock retains its relative strength, and I can buy these for maybe 15 or 20 cents with the stock still staying here, yeah, that might be a worthy candidate for today. That's the analysis that you have to go through. SNOW, take a look at that one. You can see beautiful movement here. Stock pulls back a little bit, but it's been compressing while the market's down. Yes, this could be a springboard for the stock to shoot through that $390 price point. So let's take a look at those calls and see if we've got anything working there. I suspect that this one's going to have some outrageous implied volatilities because it's a mover. And so we'll go down to the 290 strike, see what we've got. And the 290 calls, 390 calls, better go there. Actually, the stock is at 383. Let's see if we can do the 385, see where they're trading. There you go. 385 calls. 360 bid, offered at 450. Those are out of the money by 1.5 with only 2 hours left to go in trading. So these are going to be melting away like crazy if the stock still sits here. So no, I'm not going to pay $3 or $4 for these. If I can get in on a stock like this for maybe 50 cents, gosh, that's about the most I would pay for these types of plays, then yes, we know the stock has the potential to move way through that 385 strike price. In fact, it has an easy path to 390, maybe even 395. The high of the day today is 395. So yeah, heck yeah, that would work. TBT, that's not going to work. Next one is TECK, very, very strong. It's only a $18 stock. Take a look at the daily chart. Looking good, getting a little parabolic, but we don't care about it if we're just trading the last hour. So yes, this one looks pretty good too. TSM, grind, 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 5-minute chart. Yes, big spike here. Just giving back those gains from that long green candle, but the open from that long green candle still preserved while the market dips. It's holding its own right here. Yeah, TSM could work. There we've got a possible 103, 103.50 strike price that you could use if the market pulls back and it dips right down to that 103 price level and you can buy those cheap. Yeah, that would work. But again, and I can't say this enough, I may not trade any one of these stocks that I've shown you right now. I'm showing you the type of analysis that I'll be doing in the last hour of trading to find my prospects. WDC, ticking higher, market down, great relative strength, D1 chart, beautiful, going even parabolic through this horizontal resistance level. Yes, 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 love it, great, awesome. Big time momentum here. Yes, that will work. 5-minute chart. Yes, stock near the high of the day. Market down, stock near the high of the day. Yes, it could work. A little bit too far of a pullback in here. Herky jerky. Don't like this price action. Rally up, yank back, rally up, yank back, rally up, yank back. No good. I need consistency and I don't need these pullbacks in here, especially in the last hour of trading. I can't afford to risk that with only a little bit of time left into the close. So those are the searches that I'd be running. I've got a lot of different searches, but in this case, I'm looking for great option liquidity, looking for weekly options. I want the stock to have heavy volume today. I want it above the prior day's high. I want to have a strong ADX on a 15-minute basis. I could also put relative strength in here on a daily basis or on any other shorter time frame as well. These are option lottery trades. We trade them in the chat room each week. All of us and the members, we all are looking for these plays and we're posting them in the chat room so that we can give each other ideas of what might possibly work. Makes the last hour of trading very exciting and usually profitable. If you like this content, please give it a thumbs up. Make sure to sign up for my YouTube channel, subscribe to it, and turn on your notifications so that you never miss these videos. I've always got some great trade ideas in there for you. Good luck with your trading. We'll see you maybe Sunday night. I'll do a video. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.